Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this wrap-up is for Monday, and we are now at the 19th of April. Boy, time's flying. 2021, about 6:45 at night. So as we look at the market, GameStop took off $9. Why? Well, the CEO's gone. So a complete revising of this company's taking place. You'll see that 132 area, that time of challenge, the lower Bollinger Band, and I said on that, first challenge is often of a Bollinger Band where pros come out of positions. I stick with it, hang my hat on it. Well, it's 30 some odd dollars ago. URA still acting like a market that's looking for direction, but a bit of a bearish bias. They can't get my pot stocks going. You know, I don't like that. You know, you would think they'd be doing better than this. Some people watch pot X too instead of THCX. You know, it depends. I'll do whatever you want. Which brings me to this. I'm looking for some new markets to cover that are big ones. Don't give me some of these esoteric ETFs that don't have a lot of trading volume. I ask that of you. But if you can throw me some you want to see up here, it's time that we make some changes, so I'm ready for them. And I'll let you all decide what to do. Write me on YouTube. I read them all, and we'll take it from there. When we come over to gold, well, down a little bit. Silver down with it today. Currency's up, especially the British pound. So let's go to GameStop. You came down to that lower Bollinger Band, held it, went back to the 18-day average. That's where you're at. And the chart has turned, in the near term, bullish again. Higher lows, higher highs on the swing line. What's the 18-day average? What's the settlement? Bias is down. So while the swing line is up, which is bullish, the bias is down. They wipe each other out, and momentum is flat. Can't tell you what I think other than that. URA is throwing out some bearish signals. Lower highs, lower lows. You'd have to get over 1957 to negate it. I'm not looking for home runs here. 1807 would be more than happy number. The market has a habit of hitting the lower Bollinger Band, so I'm comfortable with that right now. We'll see if it can get anything going. PAVE. The problem with this, and it's drifting, is politics, as you know. The Biden administration is now fighting a fight from the Democrats. There's about 30 of them that want to remove what President Trump's caps were on the SALT, which were those deductions on your state income tax, mortgage, and so on. They want that lifted. If you're living in a state like Illinois, we have one of the highest tax rates in the United States. It is very, very painful. And they'll go, well, people can afford it. No, it's a lot of tax. They do nothing about the pension plan. They just take all the money they pick up anywhere else to pay that. They've got to address the pension plan in here. Unfortunately, we are a union city, and we're powerful with that, and that is where our problem is. It is not unions. I want to make this ultra clear. I'm not anti-union. I'm anti what we can't afford. So the unions have to figure out a way to make this all work too. The onus is on both sides. They'll never get it done. When you take a look at this, you still have higher lows, higher highs. You can see how the market is holding the 18-day average of closes. The resistance in the market is the upper Bollinger Band. You're nowhere near it, but the trend is up. So what about momentum? It's overbought. At any point, you can pull back to that 18-day average and just hang there. Is it attracting new buying? When markets are overbought, I don't think so. Doesn't mean I'm right. I don't think so. If you embed where you lock in both these numbers over 80 for several days or more, yeah. If you don't and you get any number over 70, I think you stop attracting new funds on a bullish condition when it's over 70 level, and on a bearish when it's under 30. Here's a market in THCX. Let's come back a few days. Both numbers here were under 20, not here. So the first day was Wednesday, Thursday, Friday. I got the embedded reading. I think the pros are waiting for sells in the market to hit it. I think they want to go short, and when the red line's back over 20, I think they'll come out. In SMH, here's a market that lost that bullish embedded reading. Right through here, the pattern had been, I think the pros were buying. And I think they lost on this trade. Not every trade works just because it's got an embedded reading. The market was still embedded, and watch this, and with the action not on Friday, but today, you have a reading there that is 65. I think they threw in the towel. I don't think they got hurt. I think they were buying in that zone. I talked about that in my morning subscriber video, as I do those at about 8:40 in the morning. I start recording Central Time, and they're published now about before 9:30 typically. And this was one of those trades I was discussing. Not every trade works, but this trade worked real well back here when you had the uptrend and got into that area. Nothing works all the time. You're looking for the high percentage of working. Even the casinos don't win all the time. They take most of the trade. You know that. What are your odds? 2% in your favor, 98% against you. You're playing for that. But that 2% of the time, you don't know when it's going to come and how big they're going to get hit. That's my point. The more days that are open, the more players, the better they do. When you look at XLI, what happened today? All right, you got a 79.39 reading. When it reopens, if it's not popping to the upside, I say the pros will be coming out of that market. And I do think they're long. I think they've been accumulating positions on this break, looking for up there, the 102.43. If they lose that reading, you could be back at 99.34 very, very quickly. XLE, the energy, you have lower highs, lower low. I got my arrow wrong here. You got lower highs, lower low. You're too narrow in this for me to tell a trader to make a trade one way or the other. That is what I call getting into the psychiatry trade, where you don't follow through on the downside or upside. And let's see if I turn out right on that. But whenever you get this narrow in that pipe, be careful. It could be a top, it could be a base. We don't know what it is. In SPY, you have a fully embedded reading. What am I? Bullish. I think the pros are using days like today to come out of the market on some rallies. On EFA, the emerging markets, you have a fully embedded reading. Okay, you're knocking on the door of where money should be taken off the table. If you take a look here, you're close enough to that upper Bollinger Band, and if you were buying on the pullback once it got embedded in any of this, if you did, that's where I think the money's coming off the table. So be careful here. I'm seeing a lot of markets that act like tomorrow could be interesting. We could start with that Tuesday reversal of today's action. It's late in the day action I'm going to be nervous about, because if it's another down day, it could signal that the market's doing a roll. And how deep I couldn't tell you, but it could be happening. I'll be watching all the embedded readings. I'm going to be glued to the TV tomorrow, especially in the afternoon. In GLD, what do you do the first time you hit an upper Bollinger Band when you're not embedded? That's where I think the pros took money off the table on Thursday and Friday. Gold miners, same thing. Are you embedded? Well, this one you got today. You were certainly both numbers embedding. Let's go to Friday. Yep. Let's go to day before. Oh, yeah. Day before. Oh, yeah. Day before. You've been embedded. So I think the traders have been buying this market once it got there, looking for that number. And I think at a minimum, I think they took half their position off, not there, right here on Thursday. I think that the market now is settling back until the red line is under 79. I can tend to hold on to a chunk of their position, whatever that word chunk means, but I also think they got rid of a chunk, so maybe they got out of half, or I don't know what their money management is. But I think that you have to watch to see how the market handles this break. Right now I am friendly to it. So I think it's going to be well supported until that red line is under 79 on a closing basis, looking for the upper Bollinger Band again. I'm in the bull camp. I'm in no camp in TLT. Overbought, hit the upper number here on Thursday. We talked about that. That's where I think the pros got out of everything. And I'll stick with what I said then. Last in the euro, notice how the market come alive here now. Did it embed on this day right here? That was Wednesday. Yes, both numbers over 80. Thursday. Yes, Friday. And let me go back and count these with you. First day here, second day, third. So Now it's embedded, and this is how you looked on that third, right through there. You still have a target of that upper Bollinger Band, and you're getting pretty darn close. Don't let that get by you. Even though you're coming up in that embedded reading, this combination of the Bollinger Band 100-day average, formidable. Be very, very careful with anything you want to do there, and that's pretty much what I'm seeing in the markets. One of the tools that I look at is I put out updates and so on. Every now and then I'll open my pivot points, and I keep a separate page on my charts for pivot points, always open. And I just type in the symbol that I want. It's got all the settings. And I'm looking to see, am I getting close to an entry point, resistance point? Should I make a change on what I'm doing there? Oh, the market is against me, but it's getting overbought and it's near some sell zones. I use a wealth of information from it. Do I do it on every market? No. The ones that are getting real close. But I've put together a 3-part free video series for you to learn both this and how I teach. Then from there, if I'm you, I'm going to that enhanced Bollinger Band course, things you've never seen. I'm Ira Epstein. You have a great day. I'll see you tomorrow.